The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with me this evening. Our friends in the up in the northern hemisphere, United States and Canada, of course, where most of our clients are. And David, thank you. You hear me and see my broadcast. So that's two things we're doing well today, which is always a great start. Lovely to have you with us. And it's good afternoon to, well, I could say good morning to those of you who live in the sunshine state of Queensland and Australia. Good afternoon, the rest of Australia, and our friends across the ditch in New Zealand. And I see Rob is with us today. And Rob, your charming Prime Minister still won't let me come to New Zealand to see you. And the other folks that I need to see, would love to see. David B is with us. He's another one I'd love to see. Charming indeed, says Rob. Rob is an old friend in New Zealand. He's a very, very experienced and knowledgeable trader and analyst. And I miss being able to get over to New Zealand and have a beer with my friends over there. But anyway, presumably one day we will be free. That's hoping anyway. Albert's with us, which is great. Anthony's down in New South Wales. Thank you for being with us, Anthony. David, of course, is in New Zealand. A couple of other Davids, including, I think, a new applicant with us, David Samuels. Very good to have you with us. Joe's with us. Joel from Vero Beach is with us, of course. Mark's with us. A couple of Marks are with us, yeah. Very important tutorial guys. Mark L. He's a really, really good trader, and he's done a Danielcode tutorial. He's very good at it. He's been trying for years to be a full-time trader, but he's so efficient at the job he does that every time he retires to try and be a full-time trader, he gets offered another job. And of course, always take the money when you can. Murph, my old friend, great to have you with us, my boy. Murph, when I asked him about what he thought of the Danielcode, he said, it's changed my life. It's wonderful. Monty's with us. Miles is with us. We've got a few people with us. Peter Mack, who's not a short-term trader. Rob, I've spoken about over in New Zealand. Todd's with us. Trevor's with us, and many others. What's Rob say? Take care for Christmas with family. Enjoy that bloody drinks around the pool. Absolutely, my friend. Great to have you with us. Well, a lot to talk about, and I hope you're going to find this very interesting today. It's something I've been working on. I was going to say playing with, but working on is a better expression, for a long time, most of this year, actually, and it's coming together beautifully. And I actually introduced you to it some months ago, and now we've refined it to the stage that it's actually tradable. I want to show you that today. So as we know, markets are rational, orderly, and sometimes predictable. And the Danielcode is a set of proprietary ratios that control time and price in all markets. So skip trading, I want to talk about mainly today, is my solution for those who want to stay in the trade longer. I know a lot of you do. And what this form of trading does is essentially add some filters to our normal time trading signals. And as you'll see, this system works very well. And it works on multiple time frames, a 1-bar chart, a 2-bar chart, and a 3-bar chart. It actually works on longer time frames than that, but we're talking about trading futures and Forex. And the gift of futures and Forex is that those contracts are highly geared. And gearing, leverage cuts both ways. And it's very sharp when it's going against you. So a common way of trying to stay in trade, which I know a lot of you use, is you'll use a 2-bar or a 3-bar stop. I understand that, and it actually works very well. But in my opinion, there's no logic in this method. It's wholly contrived. It's simply saying, I don't want to be elected on a trade. on a 1 or 2 or 3 bar stop, as the position might be. But protective stops should always have a finite reason to be anywhere other than true support and resistance, or at the Danielcode ratios. And we're always in this business, the Danielcode folks at least, we're very concerned to always be logical and sensible. There's no Yahoo about our trading at all. It's a serious business, and we have to treat it seriously. Now, the Danielcode time signals. If you haven't done a Danielcode tutorial, you won't know how to create and trade the Danielcode time signals. But you should be thinking about it very seriously. I've showed you these signals on and off over the years, but you won't learn anything about them from the website. You have to do a tutorial to learn how to create and trade Danielcode time signals. But a lot of you have done that, and you know what I'm talking about. The rest of you, I hope we can make it clear as we go along. So time signals are largely unknown, indeed even despised by those who don't understand. And for years, I sort of had an inkling that because the Danielcode ratios come from a time sequence, and then we use them to create price levels as well as time levels, a number of people who I respected at the time said, it can't be done. It's stupid. In fact, one very well-known guru of trading, who I must say is a terrific bloke, and I like him a lot, he said, well, the problem with time trading is if you go to your bank and say, I've made a profit of 2 hours, they'll just say, so what? But if you go to your bank and say, I've made a profit of 400 points, they'll lend you some money. So that sort of slowed me down for a long while, but I've always had this urge to develop the time signals, and we've had them now for, I guess, probably 3 years. A lot of these guys who came to an earlier tutorial with me before I developed time trading have come back and done another tutorial just to learn trading Danielcode time. And they're people that you've heard me talk about them. They're people who post in forum and let us know how their trading is going sometimes. And for those who've done it, like Mark and Murph here, the most common thing that they say, the most common feeling they have about it is, you changed my life. And we can do the same for you. And there are all sorts of reasons would it be very good to change your life. There's much more in life than you can possibly imagine. And learning Danielcode time signals gives you unfettered access to profitable trading, some of which is very, very profitable indeed, as you'll see from some of the comments that we've had over the years and we'll put in here. So we don't make statements about what to expect when you've learnt the Danielcode time trading. That's my surprise for you to find out. But some of our members over the years have graciously shared their results with us. Greg P. from California, he's a very experienced Forex and futures trader and a wealth fund manager as well. And he's sharing his observations as he goes through his Danielcode tutorial. He became a Danielcode member in 2015, attended his first Danielcode tutorial in LA, I think, for 2016. And came back this year to do another tutorial specifically to learn trading time. You can read his insights and his full name, if you like, at forum. He's been extremely generous with allowing us to do that. And his reveals of what he's seeing will stagger you. So here we are. This is some of the sort of results we've seen from clients. Dean S. up in Canada. He is usually at these tutorials. He told us that he's another guy who came back recently, the last couple of years, and did his second Danielcode tutorial to learn about trading time. And he reported that he'd made about 600% on his account earlier this year, and perhaps part of last year in that time period as well. But we know that he made 100% on his by now pretty large account in August this year, because he told us that. And he told us that at one of these webinars where he attended. And he made 80% on his account in September. I mean, these are staggering results. And after that, he told us he preferred not to continue disclosing his results. He thought it was becoming boastful. Well, it's something to boast about indeed, Dean. Very, very good trading. His friend Dan was another 2 Danielcode tutorial man, and he's a real technical guy. He's got a large business in Vancouver that relies on technology, and he's a whiz at paper trading and developing systems and what have you. And he just tested 14 futures markets over a number of months. I'm going to say it was 6 or 7 months, but I might be wrong. But it was a reasonable period of time. And he just picked all of the futures markets that we cover. And he said, just based on the Danielcode time signals, the average across all markets was 35% on margin per month. That was without any market selection criteria. And remember that markets that are dull or lifeless are where you lose money. So that's really great trading. That's what I say, but you decide. So what is this Danielcode time trading? Well, in the Danielcode lexicon, time is 29.63 days. So, and half is 14.8. So time can be 29.63 days, weeks, months, years, or better still, the Danielcode weeks, which is 6 trading days, a Danielcode month, which is 24 trading days, etc. And this calculation of Danielcode time has been made by me starting about probably over 20 years ago. And I started to see how these time ratios were falling. And the great light bulb moment was when I used the Danielcode time ratios to create price levels. It's extraordinary. But Danielcode is the proof that time and price are the same thing on different axes. So that calculation initially came from the book of Daniel. Now, I know a lot of people get offended. Anything biblical, oh, it's bloody awful. They're up in arms about it, and usually manage to add a few rude words as well. You don't have to. It's just not necessary. It's a belief system. No one's forcing it on you, but there may be something to learn, as there was for me. Lots. But if you are of a secular nature, time is also disclosed in our planet's natural time cycles. So a synodic month, you can go to Wikipedia and look it up, is 29.53 days. And it'll give you a definition of synodic time. But what it really amounts to is a synodic month is the average length of a calendar month. We know that our 12-period calendar works very well. December, it's usually very cold in the northern hemisphere. A lot of you will have snow over Christmas. In the southern hemisphere where I am, it's summer, beginning of summer, absolutely beautiful. It's all short sleeves and go swimming. But you can use, if you are of a secular nation and any of this Danielcode stuff offends you, you can use synodic time of 29.53 days, because that's also Danielcode time. You can use either time period as your base. The results are the same. So how can that be? Well, when we start looking at natural cycles, lunar cycles, solar cycles for our Earth, we finish up with most of the markets we trade, because we don't trade Bitcoin or Ether, but for all of the futures and Forex markets we trade, they trade 5 days a week. So if you've got a time cycle, a lunar time cycle, say an apogee or a perigee, And if it's falling at 1 minute past midnight on Saturday, it's going to show the time as Monday. That's the first trading day after that event. But it really should be placed on a Friday, because that's actually going to be closer to Friday than the calendar day of Monday. Although these days a lot of the futures markets open on Sunday evening, but you know what I'm saying, which means that these time cycles are valid for plus or minus one period. And that's the same whether it's a daily cycle, a 6-day cycle, a 12-day cycle, even a major trend cycle of 24 days. They're all valid for plus or minus one period. And for those of you who've been with us a while, you've seen me demonstrate those cycles over the years. So that's how you can start thinking about your time cycles as a synodic month, a totally natural geographic phenomenon, and the way the Earth rotates around the sun. So think about stops for a moment. We use stops in a few different ways. We use stop orders to enter trades. We buy or sell on stop. What does that mean? Well, technically a stop order becomes a market order when the market has traded at that number. We use both fixed dollar stops and trailing dollar stops, depending on whether we think we're with the trend or against the apparent trend. But stops should always be in a position where they mean something. I'm not supportive of simply whacking a dollar stop on because that's part of your risk management. Your stops really should be somewhere that they mean something. And the only true points of support and resistance that you will see on any chart are the Danielcode time and price ratios and daily highs and lows. So risk must be within your risk parameters, and that can be an issue, which is why if you do a Danielcode tutorial, I'll teach you in detail whether to be using a daily stop, 1 ATR, 2 ATR, etc. stop. And ATR, as you'll see, stands for average true range, and it's a very important concept if we're trading time. So time and price are the same thing on a different axis, and people find that very hard to accept. What I say is go to our chart archives at the Danielcode website. There are over 40,000 of the members' charts that I've created over the years since late 2008. When the website was launched. And you'll be hard-pressed to find a market that has turned anywhere other than at a Danielcode price level. Now, remembering that time and price are the same thing on different axes, it follows that markets will also turn at the Danielcode time levels. And time is fungible. We can make it bigger and smaller. As long as we keep the same ratios, they all work just perfectly. And all of those price levels are on those members' charts. And where they came from in the first instance is that they are, in fact, Danielcode time cycles. And I know that's a bit hard to swallow, but that's the reality of trading markets. So here we are, Danielcode time cycles. Here we are using them as price targets. This is the start of skip trading. So these red lines, this is a gold chart. We did a lot of analysis today on gold. I know it's a very popular market with many of you. I know that some of you are in fact gold bulls, and you're very welcome here. To me, gold is just a very, very good trading market, as is silver. They are terrifically important markets. So what you can see here is that this market runs up and down predominantly inside these red lines. When it gets there, if it's a really big trend, it'll bend the red lines away with it and create a larger range. And you can see that these highs and lows, by and large, they terminate at these red lines. In a general sense, I say that. So what you've got on this chart is 21 goes back to, this chart's in April 2020. This is 21 months of data. And have a look what happens next. Here you are. These are the Danielcode time signals where time and price are squared. So in other words, what we've done is we've put a 29-day highest high and 29-day lowest low filter over our time signals, and we're only going to take the time signals that occur where time and price are squared. Now, that expression, time and price are squared, I have stolen it from W.D. Gann. I was a great Gann man for probably eight or 9 years or more. I went to learn, hopefully, from a whole lot of people who profess to be Gann experts, and I spent a not so small fortune going to seminars and tutorials all around the world, and I had a lady in London and another lady in San Francisco who were buying so-called original Gann letters for me and so-called original Gann charts for me. The real truth of Gann, I know there are a lot of you who are interested in Gann, the real truth of Gann is Cephariel. His mentor was Cephariel. He's a man, his real name was Walter Gorn Old, and he was one of the leading astrologers of his time, and he's written some massive amounts of work in his published books, Cephariel, and you can search them. You can find a lot of the books are still, well, almost all of them are still in print, and there's a lot of people who believe that they are trading Gann or profess to trade Gann or want to trade Gann. The short version is, I don't want to disappoint you, but when you truly understand Gann, you'll have a different take on it, perhaps a more subtle take. But because I spent so much time and money trading Gann, I figured the very least I could do is borrow one of his phrases, and he invented that expression, time and price squared. And of course, when we use that expression, it doesn't mean what Gann meant. Gann meant by time and price being squared that price was on one of his angles. He had these 1 by 1, 1 by 3, 1 by 8 angles that he put on his charts, and some others as well, the inverse of those, 3 by 1, 8 by 1, up and down. And you got eventually what was called a Gann fan. And Gann's interpretation of time and price being squared happened when price was on one of these angles. We don't mean that at all. We do use angles, but they're entirely different angles. They're fourth seal angles. What I mean by time and price are squared is that a bar is at a known Danielcode time cycle and a known Danielcode price cycle, and they don't have to be the same. It hasn't got to be 59 by 59. It can be a 29.3% price cycle and a 29.6, I should say, and a 59.3 time cycle. So as long as we have target recognition in time and price, we say time and price are squared. And when time and price are squared, a turn is almost inevitable. So when we have a Danielcode time cycle expiring and the market is at these levels of the 29-day highest high and 29-day lowest low, that is when we get time and price squared. And this is sort of something what that chart looks like. This isn't all of the time signals, naturally. I'm only putting on the ones where time and price are squared. In other words, I'm only looking at the time signals where they have made contact with the red line, either at a high or at a low. And what we can see from that is a whole lot of numbers. In fact, this is still the gold daily chart. And you can see in this period from March 2020 to date that this method of trading has made something like $126,000 in profits over 21 months, which is near enough to $6,000 per month, or 65% on margin monthly. Now, is this real? Well, no, not really. And it's not real because, first of all, I've used a catastrophe stop in a couple of places where there have been really, really big bars, and you are going to want to use smaller stops. Slippage, etc., will reduce the total. Excuse me, the fails cost some dollars, which I haven't shown. And if you're trading time, fails become re-entry points. We now call them flip me instead of fail, but you'll understand what I'm saying as we get deeper into it. So in this particular chart, gold had a period of massive volatility from March 2020 to May this year, and you can see the earnings in that period. They're quite staggering. But stops and profit taking reduce effective operation of the system. Theoretically, systems that have no stops and no profit taking work best. They are pure trading systems, which is what this started off as. But the reality is those stops are too big. I am aware of one very, very good trading system. It's always run on the equities, which have these long trending periods, but it's got 300 odd% margin as a drawdown. Now, I guess some of this is your personal tolerance, but me, I'm very allergic to drawdown, so I want to put into here some method of stops that we know are valid, not random, but having a defined rule for them. But basically, with those sort of questions there and a few mistakes here and there, I guess is also realistic. Assume half of what this chart shows. You should easily be able to capture 50% of the theoretical. And that's 30-odd% a month return. And that makes you part of the very elite 1% of traders, the best in the world. So this method looks more than worthwhile. I know some of you were interested in it when I showed it to you some months ago. And now we've got to the stage that we're going to be able to trade this. So this is the same chart. This is gold, but this is in fact a 2-bar chart. Every one of these bars is made up of 2 trading days, and you can see it works just the same. In some ways, it actually works better, and you can see that you don't have a whole lot of trades. I mean, this is at 21 months. You've got 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13, 14, 15, 16, 17. You got 19 trades over 21 months. So this is getting pretty close to one trade a month. And I know that some of you want that. I think it's really worthwhile. The money that this program makes is pretty staggering. This is gold on a 3-day chart. Each bar here is 3 trading days. And I'm showing you this to show you how flexible this system is. And you can see here, we're going back now to 2017 at the start of this chart. I think for 4 years plus. And we are looking at only one position, which is in October, November 2019, where we didn't get time and price squared. That does happen on other charts. This is particularly a chart that loves these ratios, particularly gold. It's very, very compliant with Danielcode ratios. But there is one point there where it never gets to the 29 day low. So you can see I've introduced a new filter on this chart, and that's simply the median of the high and low, daily high, low, close. Now, this stuff is not accurate to more than about 1.5, 2 points, not 6 points. And there's a reason for that. And the reason is to do with the close and which chart you're looking at. This 057 is Trade Navigator's one of their versions of continuous charts. But in our calculations of these ratios, the closing price is very important. And depending which chart and which method you're looking at, you'll have a different closing price. I know it sounds weird, but some of these charts that we trade have a number 2 after them. Some of them have a number 3 after them. And what that designates is how the close is calculated. The big institutions, they don't trade like us. When they get a signal during the day, they will put on their orders MOC, market on close. And what happened back in the day is the institutions were getting different prices. Someone was getting a price 10 seconds before the close, some were getting a price several minutes before the close, and they got very fruity about it. You know, Fred got a better price than me, what sort of a broker are you, etc., etc. So the exchange said, we'll fix that the easy way. We'll create on some markets, the older markets, a chart with a number 2 after it. And this will designate that the closing price is settlement price. And settlement price is the average of closing trades in the 10 minutes before the last 10 minutes of trading. In other words, it's between close minus 20 and close minus 10 minutes. So the exchange takes an average of the trades in that period, and it calls that the settlement price, and it declares it is the settlement price, and that's the number that goes out when they distribute data. So everyone who's on a chart with a number 2 on it will have the same closing price. As well as that, they have charts with a number 3 on them, and they are live electronic charts. And what they are really, the close on those charts is literally the last trade that goes through before the market closes, usually just a nanosecond before the market closes. So if you're following a chart with a number 3 on it, you're really following the day traders. Whereas if you're using a chart with a number 2 on it, you're following the big money. And God is always with the big battalions. And that's why you'll see for the charts that I create for you, the members, if there is a market with a number 2 after it, that's the chart that I will use. You can see this is gold. This has got the GC2. That's telling you the close of these bars is settlement price on the day in question. Okay, let's move on and see what happens. So we can see how that works on gold. What about other markets? Well, this is the US dollar index. This is a daily chart, and you can see that we've got the midpoint in there now. Why have we got that there? Well, you'll see as we go through, for markets that don't have the volatility to reach their designated time and price squared position, the median, or the mean, the average of the high and the low, the midpoint of that, which is this blue line, is very useful for taking profits and for exercising your protective stop. This is a pretty good example of it right here. This market didn't have the momentum to go down far enough to trip the 29-day low, but it did trip the median, or the 14-day low, if you like. Time, times, and a half. If we're interested in 29, which is time, we must be interested in 59.3, which is times, plural, and we must be interested in 14.8, which is an half. And they're the only rules about trading time. This is the NASDAQ. You can see this is a market that just trends and trends and trends. And have a look at this. It's pretty well perfect, isn't it? It's just bounced between those red lines. Now, of course, if we're taking a time signal, every time that red line is hit, we're going to have some failures that you can see in that run up around December last year. It's making jagged little moves up with corrections all the way through, but it's scoring time and price squared a considerable number of times. Remember that to trade this stuff, this is daily bars, remember that if you're trading daily bars, a Danielcode time signal on a daily bar gives you the entry price at which the trade will be elected. It gives you the maximum risk you should have for that particular trade, and it also has a failure point, which is now being called the flip me point. If that point is hit, you're wrong and you should be the other way. So this is an expanded version, if you like, of the rule about outside bars. If you get an outside bar on the day of a new entry, you must stop and reverse, because it hits the failure point. It's telling you that you're wrong. And that happens to have a success rate of in the 90s. It's a very, very strong signal. And that exactly same theory plays out in 2 days, 3 days, 4-day patterns. Don't get yourself worried about this stuff. I'm going to do this for you over Christmas. We'll get up over the Christmas break when Terry's got a bit more time. We'll have the new pages ready for probably 3 Forex and 3 futures markets, which we'll trade using skip trading. So we'll do all that math for you. Don't be worried about it. I'm just trying to make sure you understand the basic concept. This is wheat. This is a daily chart. And again, you can see in about late February, early March this year, that rally up didn't quite get to the 29-day cycle. In fact, the rally down from the January high didn't get to the 29 cycle, but it did beautifully mark its position against the and-half, which is the 14-day cycle. So by adding that 14-day cycle, we're adding a continuing method of strength to our analysis. And Forex, does this work on Forex? Well, this is the Canadian Chief, or the Canadian Swiss franc chart. And this is a 2-day chart. Each of these bars is made up of 2 trading days. This is a useful technique when the markets are a little slower to move. Have a look at this. Just beautiful. It loves these 29 cycles, and it's just bouncing from one to the other to one to the other. Remember, we're entitled to allow 1 or 2 points variance at this point where time and price would be squared. It's not accurate to the tick. It's accurate to 0.1%, like all of our other indicators. But you can see by the addition of that blue line, it's really shoring up those periods of the chart where the market is not really showing a lot of volatility. And that's why, like all of our trading, it's important that you trade more than one market. If you trade one market, you'll be obsessed over it. Markets are very, very good, as you're seeing with these charts, when there's a bit of volatility around. If you get caught trading a sideways, a little consolidation, and I've seen them go for 60 days, believe it or not, you will lose money. It's the only time you'll consistently lose money using the Danielcode time or price signals. And that is because in a true consolidation, markets don't have a trend. If you said the trend is up, you'd be wrong. If you said the trend is down, you'd be wrong. There is no trend. The market can go sideways for long periods of time. That particularly happens in gold and oil, but it can happen in any market. And if you are trading a consolidation, you will lose money consistently for the period of that consolidation, which is why I tell you that the only thing in trading, if you're a Danielcode trader, the only thing you need to be paranoid about is consolidations. If you think you're in a consolidation, either go to safety mode, which I teach you at tutorials, or just stand aside and wait for a true breakout bar, which is the all clear, that it's good to go back to trading. Of course, when I say the only time you'll have losses is in a consolidation, you'll have losses all the time. We have lots of losses. The Danielcode does not have a particularly high winning strike rate. In fact, that winning strike rate is somewhere between 55 and 62.5% on average. Well, you say, I want a higher strike rate. Fine. I can give you a program that's got a 92% win rate, but it doesn't make any money. And that's because, first of all, it's too obvious, and markets hate doing what's obvious, as you saw yesterday with the Fed threatening to up bond rates by cutting the buybacks they're doing on their repo program. And for all intent and purposes, bonds should have been weaker. In fact, the bond chart went up, which means interest rates were going down. Crazy stuff, isn't it? Might be reversed today. Anyway, as I hope I was saying, and I have no idea what I was saying. Anyway, it'll be covered one way or the other. The 2-day bars working very well on Forex, where it's a little slower to move. Yes, I was saying that we have situations. The only time you lose money is during a consolidation. We have a fairly low rate of win percent compared to some programs. As I said, it's 55 to 62.5% win rate normally over a period of time in all markets. But I can give you a program that has a 92% win rate, but it doesn't make any money because A, as I said, it's too obvious, and B, the program is so refined to get to that win rate that you don't get a lot of trades anyway. So with the Danielcode, 55 to 62% win rate doesn't sound flash, but it is, because with the Danielcode you will find that your average win is twice or greater than the average loss. So if you've got an average win that's twice or more your average loss, you only need a 25% win rate to break even. And if you've got a win rate between 55 and 62, you're making a stack of money. In fact, to my knowledge, the Danielcode is the best trading program in the world. There may, for sure, be other programs I've never seen or not aware of. I think some of the very best programs are kept pretty quiet about, but to my knowledge, I can put my hand on my heart and say in the 30 years I've been trading, I've never seen anything better than the Danielcode for the business of making money. So let's move on. Here we are. So what have we got here? Well, this again is gold. I brought in as much data as I can. I didn't actually use this chart to show you the time and price squared individual signals because it just gets so clustered it's hard to make out which is which. But what this is showing you is the rule, where the rule is time times and a half. So we've still got the daily bars here, but we've added another filter, 59.3 trading days. Highest high, lowest low is the dark blue line on this, 59.3 trading days. Why? Because that's what the rule says. Time times and a half. Look at it. It's extraordinary, isn't it? Just amazing. So I'm certainly very, very interested and continue to work on that. I love these 59 cycles. It's twice 29, so there's twice as much to love. But you do have to have your management pretty much under control, which we do. So 4 times trading of all sorts. It's important to use daily bars for entries, exits. By using daily bars, we know the entry points exactly, and we know what the risk on entry is. So by knowing the entry point, we don't just pick a bar and say we're trading that. We create entry points, which would be significant reversal points. And we want the market, once we've done our analysis and we think the market's ripe for a turn, we then have these accurate calculations of the entry points, and we want the market to go to those entry points. In other words, we're not so arrogant as to say that all of our lengthy and detailed analysis of markets really is telling us anything more than the highest probability. So what we need to do is we need to create entry points, and we want the markets to turn and go to that entry point in the allowable time frame that each new time order creates, and that's called the trade being elected. Very important with Danielcode trading. All orders in the Danielcode, whether they're price orders or time orders, they're all conditional on the trade being elected. All right, so and we also know, we're using daily bars, we know the failure point, which becomes the flip me point, and this creates continuity. If you're wrong, you use the flip me point to get back with the dominant trend. And for this sort of trading, you're really trying to be in the market almost all the time. If you want to trade 2 and 3 day charts, 2 and 3 day bars, use a fixed dollar stop or a trailing stop, depending on your trend. But using your daily bars, 1 day, that gives you your entry point, your failure point, and gives you the way to manage your risk on entry. Never expose your account to more than twice average daily range, ATR. Use an ATR. Also, all these software programs have a tool that measures ATR, or average true range. It's normally set at 7 days. I suggest you use at least 29 days. Longer is better. You should use any of the Danielcode ratios, 29, 59, 74, 89, whatever you like. Longer, I think, than 29 days. Now, in the last 4 or 5 years, I've only had occasion once to go to a shorter ATR than 29 days, and that was last year in the February-March COVID flash crash that was the shortest bear market in history. But I don't like getting much too short with these ATR periods, because the money is made with a long sequence of trades. Danielcode makes money almost all the time, other than when it's consolidating. So if you're going to go out and take a shorter ATR and the market's really expanding in a volatile manner, you'll finish up risking 2 or 3 or 4 or even more times your average daily range. And you don't want to do that, because all of your wins are coming off an average daily range. If all of a sudden you introduce a risk that has 2 or 3 times average daily range, if it goes wrong, you're wiping out 2 or 3 winning trades, not just one. That's why we try to keep our average true range roughly consistent. That's a very general statement. Don't get too focused on that. Just be aware that we don't want to be making adjustments to our risk management for a sudden burst of volatility. And don't be frightened of getting stopped out. If you're stopped out, you know how to re-enter. If you've done a Danielcode tutorial, you know the best ways to re-enter. And that's all good. So what happened today? Let's have a look. If this all sounds a bit complex to you, skip trading, remember that our TO3 and TO3 Plus program is running every day, creating winning signals. And these are a few of them for you. This was today we had a nice bar up. It got a bit stunted at the end. It could have closed a whole lot higher. It just took out the stops above the previous swing, and then that's enough work for today. This is the New Zealand US dollar pair in Forex. This is dollar CAD, or the loonie as they call it, US dollar Canadian dollar pair. Look at that TO3 sell signal 2 days ago. That caused this huge key reversal bar with a great long tail on it, and that was the TO3 signal valid for the next day, which was the key reversal bar, and the day after that, which was today, and we've had a nice down move in that market. This is the euro dollar. It did much the same. Remember, these markets are correlated. Any market that's got US dollar in it, on one side or the other, they are correlated, and the market will move. All those markets will tend to move the same way, directionally. This doesn't speak, nothing in the Danielcode speaks to quantum. But if you're trading correlated markets, you need to be aware of it. I had a tutorial student in London not so very long ago, earlier this year, who did his tutorial, came back to me and said, I've been trading for 6 weeks or a month, and I'm not doing very well with your trading systems. I said, well, let's have a look at it. And that was about the same time as Greg Palladini, who you know is a very good client of the Danielcode. He was doing his tutorial, and while Greg was pointing out hundreds, thousands of points of value with Danielcode signals in Forex, this guy in London was doing poorly, very poorly. So I had a look at what he was trading, and he was trading about 6 or 7 correlated markets, which meant that we're all going the same way. That's not the idea. He obviously had a time when he wasn't really listening at his tutorial, but we don't want to trade a whole bunch of correlated markets. Very interesting. Some of our markets are so correlated, the US equities and Germany's DAX as an example, and of course the Forex, you see it continuously, they're correlated pairs. Signals in one are valid to execute in any other. So if you're a Dow trader or a NASDAQ trader, you can trade the signals from the Russell, the S&P, as well as those from the Dow and the NASDAQ, as long as the trade is elected. Anyway, here's EUR-USD, put in a big key reversal bar yesterday right at a Danielcode number, and that created the TO3 plus buy signal, which was elected today and roared up. This is the US dollar. And as you can see, it's done exactly what some of the Forex pairs with the US dollar in them have done. Big key reversal bar yesterday created a TO3 plus sell signal, valid for the day of posting and the next day, and down it came today. Nice little trade. Gold's been really interesting. Gold has been trying really hard for a week or more to rally. And we had a TO3 buy signal right on the low bar, which was yesterday. And today, look at it, whoosh. Love that. Terrific. Nice piece of trading from our TO3s. This is the same trade in silver. Again, they're very correlated. If you're trading gold, don't trade silver. If you're trading silver, don't trade gold. These markets are so highly correlated that a signal in any one can be traded in any other, so long as the trade is elected. That applies also for the HUI, and the HUI is actually an index. You can't trade it in futures. You can trade it with options, but options is a gambling game. With HUI, it is so highly correlated. It's an index of unhedged gold producers. And there used to be 25 of them. I'm not exactly sure how many they are, but somewhere like that. And it's an index made up of the value of unhedged gold miners. And it's so highly correlated with gold and silver that a signal in HUI, which we create regularly, can be executed in gold or in silver, so long as the trade is elected. Pretty good stuff, I'll tell you. Copper. Here's copper. Have a look at this. We had a Danielcode blue line at 411.90. What was the low yesterday? 411.95. And that, together with our other indicators, created a TO3 buy signal. Looked like a really big, strong bar down, was in fact setting up a TO3 buy signal, which was elected today. Learn to trade the Danielcode. This is different to any trade system you've ever seen. The precision of the Danielcode time and price levels will amaze you. The members' charts are precious and deadly. Look at them for yourself. I'm not going to bore you by going through them, but I sometimes do, because nobody is more impressed by the Danielcode than I am. And day after day after day, I go through and see where these markets turn. And, they are so incredibly close to what we're showing on the members' chart. It's extraordinary. And I guess the big takeaway is that if you look at Greg's postings in Forum, even money managers are now agreeing the Danielcode is more than a hedging option for their stocks portfolio. It is a wealth creator. So if you don't know about the Danielcode and you haven't taken your free trial, please go ahead and do so. If you want to learn this stuff, everything I do at these webinars is part of what I teach you at the Danielcode tutorial. If you want to be a super trader and join the elite, email me, jneedham@thedanielcode.com, jneedham@thedanielcode.com, and I'll send you some information on the Danielcode tutorial program. It's very, very worthwhile. If you want to change your life, do the Danielcode tutorial. Okay, so remember, the business of trading futures and Forex is not to be right. It's the business of trading is making money. If you haven't already, folks, you're most welcome to have a free trial. Go to the Danielcode website, www.thedanielcode.com, and to start your free trial, just hit the register button. Any issues, contact Terry at support@thedanielcode.com. If you previously had a free trial, the website will probably remember you and won't let you in. If that happens, contact Terry and he'll enable your free trial. This is our disclaimer, which we need to show you, we're required to show you, and I want you to take it seriously. It is very, very easy to lose money trading futures and Forex if you do not know what you're doing. The vast majority of new traders lose their money very quickly. Make sure you know what you're doing before you risk real money. And I'm really serious about that, folks, like everything about trading. Okay, so we've got a few questions here. Let's see what we've got. Akshay saying, will it be possible to add an offset of, say, 1 to 2 days and the construct of the biggest high and lower lows? Give us an indication of some reversals of the forward price. Not quite sure what you mean, Akshay. Send me an email, would you? Please, jneedham@thedanielcode.com, and put a chart in with a couple of arrows on it so I can see what you mean. And I'll certainly talk about it at the next webinar, which incidentally, folks, Christmas is coming, so we have to do our end of year webinar, don't we? It's our Christmas special that we do every year, and that will be next Thursday, 23rd of December at 8:30 p.m. So please keep that date free. You can start your festive celebrations after that's over, and we'll go through and look at some of the big issues that we've encountered during the year. Okay, Albert, flip me means stop and burst. Yes, Albert, perfect, you've got it. Well done. Anthony Gates, who's left, got to dash. Thanks for all the great webinars. Oh, all the best for Christmas. Wonderful, and to you, my friend. So that's us, folks, for this webinar. I hope you found it interesting. I hope it's something you're going to think about. And if you're interested, I'm more than happy to talk more about it. And I'm looking forward to being able to start live trading, the skip trading method, which will start after Christmas. Murph, as always, my friend, cheers to you. Look forward to talking to you next week. That's us for now, folks. Enjoy your weekend coming up very shortly. And I look forward to your company at our end of year, our Christmas special webinar, which is next Thursday, 23rd of December at 8:30 p.m. And all the best until then. Bye-bye for now.